Hi, everyone. Welcome back to the Mortgage Heroes Weekly Podcast. I'm Andy.
I'm Brian.
And there is no Will. We are Will-less again today, so just me and Brian. So Brian and I are going to jump right into this week's top. Oh, wait, I don't want to jump right into topics. We need to say congratulations to Devin and Raquel, who got married last week.
Yes.
So Will and Tanya are celebrating their son Devin getting married with Raquel. Congratulations, you guys. So they're actually all off at a family celebration this week. So again, it's just you and me. It's gonna be renamed the Andy and Brian Show here pretty soon. Sorry, memo. Sorry, not sorry, memo.
With the featured guest, Will Flores.
We'll have him as the special guy. This week's third wheel is the guy who works here. All right, Brian, let's go right into these articles, yeah?
Yep.
So the first thing we're going to talk about today, I found this on Housing Wire. This is the pending home sales tick up, snapping a string of dismal housing market reports. Now, this came out the last week of June. And really what it's that reflection of our sentiment versus our data. The data would say, oh, inventory is up. Sentiment, oh, it's hard to afford a house. There's some data behind that too. But then it's like, okay, well, prices are being chopped in some places. Fact, but also a lot of sentiment. Mortgage applications are down one week and then they're up the next week and mortgage rates are doing this and that. And now we have actual pending home sales that had been pretty weak. Now they ticked up. So do you think this is a fluke, or do you think that we are seeing some of the spring that we were expecting to see?
I think it's spring is starting to spring, and the reason being is because I feel now that the Fed spoke last week, they were able to actually give us more information and more sentiment as what direction they were going to move. And based on everything we've been seeing, everything's pointing at rate drops this upcoming meeting. What that means is that I feel a lot more people are anticipating that. Therefore, a lot more people are going to start selling their houses or putting their houses up in the market to get ahead of the curve to be able to snag that deal that's coming up, or just get in the market, because once rates drop, I mean, we're going to see a huge influx. Literally, I'm actually looking forward to seeing this report next month once that report comes out and we're able to see, what that looks like. So I think it's here to stay, Andy. I think we could clearly say summer is going to be starting these next couple of weeks in the real estate market. So I'm excited to see how things play out.
And I think it's important to note too, like it's not like we're talking about this dramatic peak in increase of pending sales. And it wasn't like this dramatic drop in the amount of pending sales. It was kind of like a neutral line with some bumps. So if you think about like speed bumps in a parking lot, it's kind of like that. It's like there's some dips in little areas of parking lot. Parking lot's flat here, and then there's some like little bumps, speed bumps, right? That's kind of like how the chart looks. And
kind of like how I drive. You get one speed bump, you go really fast, and then you have another speed bump.
Fortunately for us, we get this data month by month, Brian. I'm inclined to think that temporarily it's temporary. And the reason is because of what you mentioned already. I think it's the Fed. I think it has to do with our sentiment and our behavior towards what interest rates are doing in the market at large with finance, not just mortgage. Now, mortgage real estate, of course, is a huge piece of the economy. And when it comes to affordability connected to mortgage-backed securities, which means interest rates, everyone would love to see interest rates go down. That would actually be the best case scenario for the amount of inventory that's hit the market now, is if rates came back into some affordable place where people have been sitting on the sidelines because of the rate being high. So if we see a little bit of a softening of mortgage rates, that demand increase can match the inventory increase, which then naturally spills into there being more pending home sales. So I'm hoping that this is actually an indicator and a preview of what might be to come when we look at June's data when it's done, July's data, and August's data. I think that this trend is going to continue, and I don't think it's just a blip in the radar.
No, I think that strong monthly growth shows a sign of stabilization, and I'm confident that we will see a lot more transactions as we progress.
One of the things I know that I've been when I have conversations with people, I know I talk to you guys on the sales side, but I talk to family and friends, and I talk to my other people I know in business, and I think that the sentiment has changed a lot on the behavior of the consumer, where people are saying, you know what, I am not going to wait for a 10% correction or a 15% correction, whatever level of correction you've been hearing. I think people are just sick and tired of it.
Yeah.
I think they're like, you know what? God dang it. If I'm going to have to do it, I better do it now. Kind of that now or never attitude. I'm just starting to see a lot more of that.
Yeah, I would agree. And the reason is because just in general, I feel like eventually over time, when you want to do something, you keep telling it to yourself, and you get over whatever the obstacle is. You're like, all right, it's been in my head for so long. I do want it. Now I'm going to have to just, accept the terms that are out there. And can I do it? Yes. Do I want to do it? Probably not, because of the affordability and what that changes in your life. But I think the want is overweighing, the situations in your life where you're like, you know what, I am going to take a hack at it, and I am going to get myself into a house, and I'll play it out how it should be played out, and I'll adjust as things come.
Yeah, and so something to also consider, and this might be a little bit more on the nerdy side of the topic, but remember that one pending sale begets another in most cases. So if I have sold my house or I have my house listed for sale and it goes into pending status, I am now going to become a buyer in another sale that's going to go into pending status. And so this number moves a lot more slowly than some of the other ones because they're a reflection of market activity that's actually underway. And the exceptions to the rule are when there's a sale because there was a death and there's no one else living in the house anymore, or in the case of like an elderly parent where they need to go into some sort of assisted living. Well, they're selling the house, but then the person isn't going into a new transaction. They're going to a home or something like that. Yeah. Those are kind of more of the exceptions. I know it's only two examples of a lot of possible examples. I'm only bringing those two up because typically what's going to happen is when you see pending sales like this, it's a pending sale to another pending sale to another pending sale to another pending sale. And yeah, you'll have situations sprinkled in there where one of those in the chain of pending sales is going to a retirement home or an assisted living home, or it's because there was a death and then the house is getting sold as part of the sell-off of the assets in the trust or whatever. But otherwise, what you should kind of expect, I would say, is like slow and steady wins the race when it comes to pending sales.
Yeah, I think another opinion would be that, for the strong approved buyers right now that are, coasting, don't really have that pressure to purchase a house. As rates drop, a lot more people are going to enter the market. And, as you're searching for houses, shopping for houses, from seeing 2 to 3 parties, you'll start seeing 5 to 6 and plus, which then means the offers that you aggressively were going to submit now maybe have to get tapered down a bit and be a little bit more on the competitive side, because you might not be the only one, competing for that property. Therefore, you have to stand out.
Well, I think and mathematically speaking right now, the pending sale, let's just say there's one pending sale on your street. Mm-hmm. Well, that's a house you can't go buy now. Yeah. So if you're approved and you're looking to buy a house, then that's now one less than the inventory. The good news is on the other side of that coin, there's a lot of more homes now this year than there were last year. So you still have plenty of selection available. I know that's situational based on your zip code and all that kind of stuff, but just to hang with me in theory here. The idea is that if there's a pending sale that goes into closing, that the house is not available to you. But because there's fewer buyers now than there would be assumed to be, and you also have more inventory, you still should have a lot of selection going into the summer season, which then begs the question, like, is it the time for people who've been waiting to take action? And you brought this up by text today, and it's kind of our second topic moving on from this one is, okay, well, pending sales is an indication that people are getting qualified for mortgages. So if you had to say to someone whether they should qualify for a mortgage now and wait for rates to go down, or wait for rates to go down and then qualify, what would you tell them and why?
So we just had this conversation at a discussion we led earlier this morning at Camp Pendleton. And one of the questions that was asked was exactly that. How far or what timeline should I start the process of getting approved? And I told them, realistically, if you want to purchase a house within a year, 3 to 4 months is when you should start, assessing your situation, start running some numbers, sitting down with the professional, because that gives you a runway to fix anything that needs to be put into place, budget according to now that you know your payments and what your monthlies could be. But more importantly, it gives you the ability to be flexible, to shop without pressure, and really put yourself in the scenario where you can submit offers where they're going to benefit you in the best way possible. What I mean by that is that if there's 10 people competing for one house, chances are you're not going to get the best terms or the terms that you'd like. But if you're prepared and you're consistently shopping and you go out there and you see a house that fits your price, fits your box, and there's not much competition, you could snag a deal real quick. Instead of waiting to get approved, waiting for rates to drop, you can now move into that property, and then down the line you can refinance, get your rate to drop. So I would say start sooner rather than later, and for me it's 3 to 4 months out.
So I agree with that, and I have a different spin on it, but it's kind of the same thing, but maybe with a different wrapper. It is, look, if rates are, let's say, at their highest they have been and will be for the foreseen future, and property values have stabilized, neutralized, flattened, then see if you can get approved now. Because if this is, let's say, the peak of the threshold of what it takes to get qualified, and things only get better, meaning the prices might stay the way they are, or slight dips here and there, and also rates go down in the future, well, then that only makes it better for you. That makes it better for you on two fronts. If you are approved for $800,000 right now with a 7% rate, well, when rates go to 6.5, then you can afford $800,000 for less monthly money. Or you get a 6.5 rate future, and you can now afford $825 or $845 or something that's commensurate to the lower monthly payment. So in either way you slice it, the advantage is to know what you're working with right now, and then whether you choose to take action on that is on you. And that's fine that it's on you, but at least know. I'm saying go in armed and ready versus waiting and then maybe later finding out that you could have done something sooner. And that we have seen before because people were afraid to ask.
No, 100%. And knowing your budget is powerful because then it allows you to only shop for houses that fall within your budget and not look for houses that you fall in love with that down the line you're not able to purchase and then you get discouraged. And on top of that, having a pre-approval really puts perspective for you to be able to strike while the iron is hot. So meaning that if a property's out, you're ready to buy it, you can submit an offer right away rather than waiting maybe a week to get pre-approved and then that house is gone. So it really puts you in a position to be flexible, be quick, and move accordingly depending on how quick you want to get the property.
This brings up another great point. I didn't know you were going to say that. But this brings up another great point, which is not everybody has the same time urgency or time isn't always the top priority for why they're moving. If I have a job change or I'm moving to a new city that's marked with a start date for something, yeah, I have a time issue. If I'm just trying to stay around this neighborhood and I already live here and I got my eyes out for the right place, I don't care when it shows up because I'm willing to wait for 30 days if it's that short. I'm willing to wait for 9 months, 12 months, 18 months if it takes that long because I'm not under time pressure. So I think there's a use case where if time is on your side, then you should still find out now if you can qualify, and then you get to be selective.
Yeah.
I think that's a great option. If you don't, then you absolutely have to get qualified sooner. You have to use the 3 to 4 month rule like Brian's talking about, because if you have something that's in your life that's waiting for you to start somewhere else by September 1st, by October 1st, that process technically starts right now in the month of July.
No, and let's take on that scenario. I think that's such a really good example you bring up because there's a lot of people right now that want to buy another house but are in that same situation where it's like, I don't want to move unless I find the house that, allows me to take these golden handcuffs off and move into the next property. And I feel that if you are waiting around for that property to just pop up and you're not pre-approved or ready to strike when that opportunity comes, someone else is. And someone else is going to get that house in your own neighborhood because you weren't ready. Now, I understand you don't want to get approved because you don't want to run your numbers or you don't want to run your credit right away. That's okay. You could do a soft credit pull and still wait for you to, for that property to come up. But the good thing is that once you're pre-approved, your mindset is going to change already because you're like, oh, I'm approved. I can buy that. I know I can buy that. So by default, you're already going to be speaking to the community, talking to people, and figuring out how that property is going to come out. Other way around, if you're not approved, if it pops up, your neighbor puts their house up on the market, let's say somebody already knew that a month ago, they were looking at that property, boom, they're just waiting for the house to hit the market. Whereas it hit the market, let me go get it pre-approved, open house that weekend, gone by Monday.
I want people to begin thinking about what they need to do in their scenario and in their life now so that they're ready when the iron is hot. They can strike when the iron's hot. Because if you do have a credit issue that needs to be resolved, let's say there's an error on your credit report. Well, that might actually take a couple weeks or an entire month or a full billing cycle before it's rectified on the bureau side so that your credit then qualifies you. That's kind of issue number one. The other thing is, it's boring for us to talk about all the nuances of loan approvals. I want to talk about what people need to be thinking about, why they need to be thinking about it, and how to frame their decision-making in when to find you, when to find Will, what scenarios need to be prioritized based on their situation, not the situation that the paper might just say. It's what's most relevant in your life that needs to happen, that the game plan needs to be put around. And when you find us here talking about this and all these articles and the economy and all that, this is all to provide some contextualization so you can go, oh, this is this, that's that. How close or far am I from those things? And what choices do I have to make? And how do I make those with these people so that I can get the thing that I ultimately want?
I want to believe that everybody, if they had the opportunity to purchase a house without any obstacles, they would. And I feel that a lot of people would if they had the right information in front of them. But I think the situation starts brewing in your head when, you know, you were living in an apartment complex, there's no parking, you only have one parking, it's tough to get parking. You know, when you're renting and you don't have enough room, you have a baby on the way, and, you know, now it's time to think like, hey, do I really want to stay in this one room apartment with a baby on the way? Yeah, I have a good job. Yeah, we've been saving some money, but, you know, now it's not just about saving the money, it's about creating a space for my child to grow up in and be able to call home. So I think it's those decisions that, you know, it doesn't really matter about the money, although it does. It's more about what can I do to build this house for my family? What can I do to better my situation? And I think that if you look at your situation and you're not where you want to be, and for people that, you know, believe that home is, you know, the biggest thing in their life, I think that you need to start aligning yourself, your thoughts, and asking yourself, what can I do to put myself in the position or give myself the opportunity to then be able to purchase a house? Because if we fall in the mindset of, oh, I can't, I never can, my Theo couldn't, my aunt couldn't, oh, they said it's too hard, oh, I need this credit, you're already disqualifying yourself based on thoughts that you're eluding yourself. Nobody else told you that. But I just really feel that if you change your mindset and say, how can I align myself with the opportunity to learn, the opportunity to, you know, be able to buy a house, it's not going to happen right away. But if you keep drilling that in your head, it's going to come one way or another. You're going to get a spark of a thought. You're going to get someone that brings something up. Something somehow is going to happen. You're going to be like, oh, I think I know how I need to do it. But it's conditioning your mind and aligning yourself with being able to put yourself in those positions.
The way I look at it is, don't handcuff yourself to other people's outcomes.
Yes.
Don't handcuff your aspirations to other people's outcomes. Find out for yourself by asking the right questions. Think about how you need to think about. And that's the thing that I had to learn in my adult years. No one taught me when I was in my 20s. I learned this in my 30s, is think about what you're thinking about. If you don't take time to stop and think about what you're thinking about and think about how you're thinking about it, you're going to be stuck in these cycles behaviorally and maybe financially and in the decision-making process that are just going to spin you in circles like a carousel or a merry-go-round. And what you're really looking for is over there, down the next street, across the tracks, whatever you want to call it. So I would say just be very, very careful. Do not handcuff your aspirations to other people's outcomes, and think about what you are thinking about when it comes to this.
No, that's so good, and it's so true. It's like you never think about what you think about, but you have to start thinking about it.
It's one of the benefits of being an old man, Brian. Sometimes you learn some stuff that you can share with others.
Yeah, I'm having all these aha moments as I'm getting older.
Well, I want to go on and I want to talk next. So you had posed the question to me, or was it a question or was it more of a comment? You said your first home won't be your forever home. Yeah. So tell me about why are you bringing this up in today's conversation?
Well, I feel like I was mentioning, everybody I want to hope aspires to buy a house if they're able to, but we emotionally get very distracted with, you know, buying this big house that we want it to be perfect. And what I've learned is that when you want something, it doesn't always need to be perfect. It just needs to be able to, you know, you need to be able to see what you want and then be able to move forward knowing that down the line or with faith, you can make it happen. And I think we by nature just default to obsessing over one thing, and we want it so bad that it really blocks away our ability to think about, you know, what really matters at times. And I think that when you first buy a house, the first thing you think about is, oh, I'm going to get in this house for 30 years. Oh, I'm going to live in this forever. No. This is just your first house. And the easiest way I could put it is the first car that you ever drove that was given to you or that your parents bought you or that you bought yourself, was that the car that you kept forever or that you plan on keeping forever? I don't think so. And I feel that that's how it is for your first house. You know, you get into your first house, you know, it's something that you can call yours, but obviously unless you're like a millionaire and you're very, you know, like secure with money, then you're not going to buy your forever house right off the bat.
Well, and again, everyone's kind of like target for whatever their forever house is. It is different. It may not just be a millionaire house or whatever. My friend Rams is funny. He has this thing where he's like, one of my aspirations is that I would eventually have a house that you don't have to back into the driveway and you can actually just drive in a circle around it. And I'm like, okay, that's cool. That's his like a forever home idea. As you were talking about the forever home and you mentioned like the whole millionaire status thing, I was thinking actually about veterans. Now, people who are active duty military, let's say they've done their 20 years and they have veteran status, not just separated, but but actually veteran, right? They're retired. I shouldn't say veteran status. They're retired status. The house they buy, wherever they separate from the military and end up, that might actually be their forever home. Now, it's not the rule. It's kind of like the exception to the rule. Yeah. But I'm going to go back to something that our friend Lloyd Stanford's told for many episodes and many conversations, which is, if he would have known sooner, while he was in active duty, he would have bought a house in every single city he was PCS to. Now, the lesson in that is that this is from someone who spent 32 years in the Navy and was at the head of the command for thousands of men and women who have fought for our country. And he came on here and said, I would have bought a place near a place, which means that his first home was absolutely not his forever home. So to your point, the first one he bought and did buy is not the one he lives in now. Yeah. And the one he lives in now still isn't going to be his forever home. There's also the exception to the rule, which is if someone does 20 years, 25, maybe even 30, if they have not bought a house with their V eligibility during the 20 years, that's a lot of lost opportunity when it comes to selling it. But also I can see, and I've heard this, and this is why I'm bringing it up, I've heard people say, I'm just going to move to Tennessee and I'm just going to live out the rest of my life there. And I'm going to use my VA then. Okay, well, that's your choice. You don't have to buy a house right now. Yeah. If you want to buy it later, that's fine. So I think that's more of an exception to the rule than the rule itself. And I think part of what you're talking about too, that I'm picking up on, is I think generationally we look at houses different. Yeah. The baby boomers ahead of me, they looked at houses like you buy a house and you pay that house off and you live there forever. You die in that house, or you leave that house for your next generation. Yeah. Now, there's still a lot of that in my generation, maybe less of it than in the boomers. And even less in the millennials, even less beyond that, right?
Well, I compared it to a car, so.
Well, I know you did. I was just going to say, like, you just said it's like a car. So I get that part. But so it's not just generational, though. I think it also speaks to life change. You mentioned this in the previous segment where it's like, hey, if you have a baby on the way, maybe you're not going to stay in that apartment and you got to go get a place that's got 3 bedrooms instead of 2 or 2 bedrooms instead of 1. Yeah. So life change is usually going to be an indicator of when moves are made too. And this is, again, a case for that first house may not be your forever home. And if you can't afford to keep the first house and just add it to your portfolio of real estate you collect along the way, then even more power to you. If you can't, that's fine. Then you're a pending sale. Just like we talked about at the top of the show. You put your house on the market, it goes pending, and then you're looking to buy another one, and you're putting that house in pending. Here we go. Domino effect.
I think one of the good ways to look at it, if you're, looking at it from a millennial point of view, when you're buying your first house, make a strategic move and not an emotional one, and look to align yourself when purchasing to something that's closer to your lifestyle in that moment and your financial goals at that moment as well. Because if you're looking to buy with like, well, okay, down the line, I'm going to do this, down the line. It's okay to think in the future, but when you're just getting started, it's like stepping stones. How are you going to utilize this property to get to the next property, to get to the next one, if that's what you're looking to do? But I just feel that when it comes to your first property, by default, it's very emotional, when you should add more, strategic planning into there and let your emotions, not get in the way so much.
Yeah, that's awesome, man. I think there's a place in everyone's heart who has a first home that goes, this is my first home and I'm going to love this place. And I know that, again, we're talking about mentality a lot today too, and behavior and how we look at real estate, how we look at financing, how we look at approvals and all that. And I think that how you look at your first home matters a lot. And some people will look at it with a lot of gratitude and a lot of sentiment because like, it's my first house. Like I still think about my first house and I've moved twice since then. So yeah, my first house was this. It's not my forever home, but it does have a special place in my heart because that's where we raised our 3 girls in their first years. And so it matters to me. And I look at pictures and it's like, oh, their first birthday was there. Oh, and that daughter's 3rd birthday was there. Oh my gosh, we rode bikes in the yard. And oh, I remember this is where we used to play in the grass. And it's like, oh my gosh, I think about these things. So there's a lot of sentiment and emotion connected to that.
Yeah. No, and that's awesome that you share that. And I feel that, a lot of people at the end of the day want to have a house so that they can build those types of memories. And I think that's ultimately everyone. I mean, you just buy a house and say, hey, I just have a roof over my head. Yeah. You want to experience it with people, right? That's why when you just move in, you have a housewarming party, you invite all your family. Like, I feel that's the true meaning of having a house, a place where you could bring all your family together and enjoy those beautiful experiences that you want to, share with everyone.
So it's as we talk about, right? The difference between having a house and building a home.
100%. That's it.
So Brian, I want to talk about a new way to buy a house and build a home, which is cryptocurrency. What is this about? I mean, I kind of know what it's about a little bit.
Sign up for the Heroes coin.
I do. Oh, jeez. Oh, gosh. Let's stay out of all that chaos of creating coins and all that. Meme coin. So there is a proposal. Well, that's not even the right framing of it. The topic really is, what do you think about cryptocurrency and being able to use cryptocurrency as part of a real estate transaction to buy and sell real estate, to buy real estate. But as a seller, would you accept cryptocurrency as a method of currency to accept the proceeds of your sale? And then what do we think about cryptocurrencies as being part of the financial system when it comes to mortgages? So I want to kind of talk about all those things. So it's being proposed, it's being talked about, it's being floated. My base case and also loudest argument will be that this all comes down to market adoption.
Yeah.
Not everybody plays in this space. Not everybody will want to play in this space. And this space without mass adoption is going to be a difficult and uphill climb to convince large swaths of the population that cryptocurrency is a better way to conduct real estate transactions than the current way. That's where I'm starting from. I'm open to new ideas. I'm open to your comments. I'm open to your questions. I'm open to your criticisms and your challenges too, because if we're having this conversation right now, this is not going away. This is something that we're going to eventually have to continue talking more about. So I'm admitting upfront, historically and in the show, it's about adoption for me, and people are going to have to want to have this method of payment over all the other options. What do you think?
So I follow along the lines of that as well. You need everybody to participate for it to actually work. But just like right now in real estate, if you look at different markets, like, we're in California, everything's very quick here. You want everything fast. You want everything done yesterday. You go to other pockets of the country, they're a lot more, slower with transactions. They don't really, have that, pedal to the metal. We got to go. So I feel it's going to happen in phases. They're going to have to roll it out somewhere, see how that happens. And if it works out, great, but it's not going to be a mass adoption from the beginning. But what I will say is that I'm excited for this to happen because it does allow for other people, and it does bring a lot more type of buyers into the market. And I think a lot of people have been waiting for this. There's a lot of people that adopted cryptocurrency very early and are sitting on, huge amounts of it that now they can actually realize into real assets. And I think that's going to be where a lot of, the main start is going to be with investors transferring their money into real assets by buying investment properties, because now you can liquidate that and put that into an actual asset and move your money around. Whereas before you just had your cryptocurrency, you can't do nothing besides hold. Now you can actually use those gains to be able to purchase other assets that then just add to your portfolio. But if we bring it down to just, the ground level, buyers and sellers, loan officers and realtors, it really comes down to how much they know, but also how much their clients know. And by default, if you're a realtor that's already, invested in cryptocurrency, is very knowledgeable in the cryptocurrency space, more often than not, the clientele that you're serving is going to be of that mindset as well. So I think it's going to go hand in hand by person, but it does need, mass adoption for it to really take off. But I will say this is the start, just like the internet, just like, when radio went to TV, things like that. We're bridging that gap where there's innovation happening in industries, and there's always no, this is bad. Uber's not going to work. Taxis forever. And then now look at how much that just revolutionized business in general. So I'm saying that this, although it's not clear right now, this is going to take over 10, 15, maybe 20 years from now, it's definitely going to be the way that real estate transacts. The reason I say that is because there's this company called Proppy that's already doing cryptocurrency real estate sales. Although they do it in a complete different way, there's already companies that you're able to, transact in cryptocurrency to be able to purchase real assets. So it's just a matter of time before mainstream, the actual real estate industry, takes it and runs with it as well.
So I have an analogy for you, and actually I'm going to put this up on the screen right now, and I'm going to show you what this is, Brian. This is a bell curve, which is called the law of diffusion of innovation. And in essence, what it is whenever something new comes into the market for us, whether it's flat screen TVs, it's MP3 players, iPhones, the latest technological thing, even AI.
Yeah.
There's what are called the innovators, then the early adopters, the early majority, late majority, and the laggards. And this is the bulk of the population who exist in each one of these stages. And I'm willing to bet that right now, the innovators have already been talking about cryptocurrency for years. I think we're probably in the early adopters phase of this.
Yes.
First of all, it's clearly not the early majority, and it's clearly not the late majority. It's not the bulk. I mean, you look at the graph, and 68% of the population is the early majority and late majority, right? So I think we're in this part where we're looking at the innovators and then the early adopters. We're kind of flipping into that. And again, the speed at which that happens has yet to be seen. I think there's a lot of volatility in those markets. I know there's a lot of volatility in those markets. I look at them, I watch them, I chart them out because I'm a dork and I'm fascinated by it. But I am not quick to try to transact purchases in my life with cryptocurrency versus my debit card or company credit card, that kind of thing. So I'm still using dollar-backed assets, if you will. Now, I think that there will be a case in a point in time where broader mass adoption of blockchain technology large is going to then be the front door getting kicked down for cryptocurrency to be a method along the way. So I think as title companies, escrow companies, county recorders, other connected pieces of the real estate transaction get onto the blockchain, I think that's naturally going to create more of this curve on this bell curve graph of the early adopters. That's going to be a lot quicker. Then the early majority will be even faster. And then the late majority will be super quick. And the laggards, there's always going to be laggards that are never going to end up getting the newest phone. They're still going to have a landline. They're still going to have cable. They're not doing streaming. They're not doing fiber. They're just not going to. I don't want to. I don't want it. I don't even want Wi-Fi at my house, right? No house alarm. I don't want it. So
I can't get hacked.
I think blockchain and adoption of blockchain is going to be the entryway for the cryptocurrency part to actually lock in and take effect.
So I like that you brought that up. So I want to say about 2 or 3 years ago, I did I was speaking at a small meetup, and the people that were doing the meetup were very into crypto. They're all about, Bitcoin, Ethereum, all that stuff. And they were trying to bridge the gap and share the ideas of how real estate and crypto could come together. At that conference or at that meetup, I spoke and I told them, like, hey, for me, the way that I look at it, it all happens with mass adoption. But where we really need it, where I could see accelerating the process of that adoption is in escrow and title and things that could be done very quickly rather than person to person, email to email, day to day, when things could just happen instantly. That's where I feel there's a lot of open ground to innovate the real estate industry because of the quickness, the efficiency, and the accuracy that you're able to do certain things. Where in the way that we do it right now, it's all human, it's all human interaction. It's all human guided. So there is a large room for error. There is time, there is delays because of, certain things that are happening out of people's control. And when people start realizing that you can close faster, that you can close sooner, that you can close quicker, and that it might be a lot more cost effective, a lot of people are going to start gravitating towards that new way of doing things.
But you made a good point without knowing. Maybe is it more cost effective? Yeah, it's going to have to be more cost effective.
Yeah, that's the only way that I feel would tip the way.
Yeah, and again, this is getting a little bit on the very technical side, but there are certain things where it's more cost effective just because it is. And again, but you're going to run into the behavior part. If I don't want to receive cryptocurrency as the payment from a thing, then I'm not going to. You can want to pay me that way all day long, but if I don't understand it, I don't have a cold wallet, I don't have an actual wallet, like that creates problems for me on the receiving side, right? If I'm a person who doesn't want to, then I just don't want to. I think there's maybe some issues with that, some run-in. But yeah, ultimately what ends up happening in every evolution of technology is that technology that's introduced becomes cheaper. So flat screen TVs came out and they were 20 grand, and then they were 10, then they were 5, then they were 3, then they were 2. Now they're at Walmart next to the dog food for $250, right? Same thing. Cell phones were more expensive. Well, but God, never mind. That's actually probably a bad example because they keep getting more expensive now. They're cheaper to make now than they were before. The margins are crazier. But in that same spirit of that, I think that it would have to become such a time saver and a money saver for it really to work. And I'm going to say one last thing is it might have to be forced on some people because Fannie Mae and Freddie Mac's names got brought up and connected to this topic today. And if they say that this is how it's going to have to be, well, then now the industry and all the participants are not left with another choice.
Yeah.
That means something if you're in the crypto space. If Fannie Mae and Freddie Mac impose this as an option, or they can introduce it as an option. If they impose it as the preferred method and there's benefit or different upside for you personally to transact in this method, the crypto markets are going to go crazy.
So one of the things that came to mind as you were saying that is, so let's say you, and this is just me, like I'm actually kind of asking a question too. Think with me here. So if you agree to get your house purchased in Bitcoin or some sort of cryptocurrency, right? Boom, they send you the Bitcoin. It is what it is. You got it. Great, transaction closed. But let's say you want to convert that money into cash. Are you paying taxes on the money that you're moving over into cash?
Well, no, I think the taxation would be on the sale because if you're filing taxes in the year that you sold the property, you'd still have to be reporting what did you sell the house for. Capital gains isn't based on method of pay. It's price versus your starting basis. So it's basis of acquisition versus sale price that determines capital gains, not whether I paid you in pennies or I paid you in a cashier's check or a wire.
I guess what I was trying to ask, and getting a little bit more technical, how there's those gas fees and those fees for whenever you transfer money.
Oh, yeah, of course. Oh, I'm sorry. I apologize.
No, I didn't really.
Yes, you're talking about the gas and the fee to convert it from Bitcoin into cash that you can then put into a bank account.
Because buying a house isn't just $1,000, $2,000, $3,000 that you could pay. Okay, like $40, $50. Oh, right. Yeah, you're paying thousands of dollars if you're getting your house purchased for. What, $400,000, $500,000, $1 million?
Yeah, they're going to have to come up with a solution for that. Well, I shouldn't say they have to. They may or may not. But again, if you want the market to adopt it, you're going to have to make it digestible for people. And this is one of the things that they're going to have to figure out.
That's kind of what I'm just kind of talking a lot like, hey, somebody's going to have this problem or this is going to be something that comes up in the future. And I feel that, it sounds great in theory, but then there's those little nuances in between, our industry laws and all that stuff that still will play a part of how things can actually just integrate and just, go.
Yeah, I think some of this is still a little bit far off on the horizon. I'm inclined to think that at the rate at which AI is being used and is changing, I think that could accelerate this, but I don't think it's going to accelerate the human psychological behavioral component. It can it can answer the mechanical speed of things. Yeah. But the person speed is still going to be at the person.
I guess it's just like when we went from cash to credit cards.
Yeah, same. Yeah.
It's like mass adoption. Hey, no, I like cash, no plastic.
Yeah, and it's all gamified, and points and cash back and all that, which, by the way, the retailers pay for. I don't know if you know that or not, but anyways, let's not go down that rabbit hole, Brian.
Did you know when that they ask you at the end when you pay out a store, like, hey, would you like to round up your money to support this cost? They're actually using your money to pay down their taxes.
That is correct. Yeah. Yeah. Well, yes. Well, because it's not a sale; it's a donation.
Yeah. Exactly.
Yeah. So yeah, it's not a sale. It's not on their gross receipts. Actually, it's a donation.
I thought we were sharing just fun facts.
Sharing nerd stuff. Yeah. So yeah, I think there's more to come on the cryptocurrency thing. I know sometimes on the show we say like this isn't the end of it because it isn't. Like we're every week learning new things. Last week we talked about
be a whole thing.
The ADU clamp down in San Diego. That's definitely not the last time we're going to talk about that topic. That's got to come full circle because some of these things I just learned this week that there's timeframes that are already in place connected to that city council meeting. That like the mayor already signed off on something this week that now has a 30-day time frame, and now I got to go back and do all the research and figure out what that is so we can talk about it next week because now we have to tackle that one. So anyways, Brian, I wanted to just I wanted to thank you for doing all this with me today. I know it's a little bit of a different change because we don't want to talk about articles all the time, but I really wanted to get into some of these topics and really figure out more of how we can help people start thinking about what they're thinking about, and then also just to be aware of some things that are coming up on the horizon mechanically, like the cryptocurrency thing that might be changing the way real estate looks in the future.
Yeah, I know. For me, I appreciate these topics because it allows us to really dive deep into the solutions, really unpack the problem, unpack the situation. I like talking about articles, but articles is just information that's already shared. It's a perspective. But when we talk about topics, we could really give examples, break situations down, and really put ourselves in the position that, our clients or past clients have been in, and share those insights that's helped them move forward, get through an obstacle. And I think these are very practical in the sense that they could run with it, listen to it today, and be like, oh, cool, I can apply that to my, shopping tomorrow.
Yeah. Good, man. Really thankful for you being on the show today. Will, we miss you. Once again, congratulations to Devin and Raquel on their marriage. We hope that you all have a good and safe 4th of July. We hope that you enjoy time with friends or family. If fireworks are part of your life, just take that all in, soak in the moment, and remember what we're celebrating on the 4th of July. Brian, any final thoughts?
Yeah, so today, for the first time ever, I got to go on base to Camp Pendleton, and just being in that environment, shout out my realtor partner, Xavier Zamarron, the cowboy hat guy. It just really made me feel very grateful about the land that we live in, the security that we have, and the service members that legit sacrifice their life and they're on go anytime anything happens to America. It just really made me feel proud. It really made me feel like, America first, because of the fact that this is our home. And just like everybody that's listening takes care of their house and doesn't allow anybody to go in their house that's not permitted, this is how I feel about America, that this is our house and it's our responsibility to show people how America needs to get treated, and just like you do at your house.
Well, I certainly appreciate all of you that joined us here in our little house of the internet on YouTube. And if you're listening to us on your favorite podcast platform, thanks for joining us in our little room called Mortgage Heroes. We certainly appreciate you. Remember to like this video, subscribe to this channel, and turn on notifications so that you catch every episode every time we drop one. We are going to be off the week for the 4th of July. I'm sorry, working, but the show will be off the week of 4th of July. We'll return and see you guys the week after that. We wish you a safe 4th of July. Happy times, good times, and thank you all so much for your service. We sincerely appreciate it from the bottom of our hearts. Thank you, and we'll see you again next week.
Happy birthday, America.
If you like this video and like to subscribe, click here. And if you want to watch other videos, click here.